Bitcoin ETF flows are flashing 5 institutional signals most retail allocators are completely missing right now. Dive deep into spot ETF inflow data, on-chain accumulation patterns, and market structure shifts that reveal what institutional money is actually doing in mid-2026. We cover exchange reserves, miner behavior, and derivatives positioning to build a complete picture for serious Bitcoin allocators. What you'll learn: which 3 ETF flow thresholds historically precede 30% plus price moves, how to read exchange reserve drawdowns alongside ETF inflows for confirmation, what the current funding rate, open interest combo is signaling for downside risk, a repeatable 5-signal framework you can run every week before making any allocation. Chapters 0 o'clock, Intro 045, Why ETF flows are the new on-chain signal 230, the 3 inflow thresholds that actually matter. 4:15, Exchange reserves plus ETF data, the confirmation stack. 6 o'clock, Derivatives warning signs, hiding in plain sight. 7:30, Key takeaways resources, live Bitcoin treasury dashboard, https://btcexposure.com, free newsletter, weekly Bitcoin treasury brief, educational content only, not financial advice. Bitcoin ETF, institutional Bitcoin ETF flows 2026, spot Bitcoin ETF inflows, Bitcoin on-chain data analysis, Bitcoin exchange reserves, Bitcoin market structure 2026, Bitcoin ETF flow, signals institutional allocators, Bitcoin funding rate open interest analysis, Bitcoin accumulation institutional signal, when to buy Bitcoin ETF allocation intro. Most investors watching Bitcoin ETF inflows are looking at the wrong number entirely. And it's not the headline daily flow figure. It's the structure underneath it, the sequencing, the confirmation stack. And right now, that structure is telling a very specific story that almost nobody in the retail space is talking about. I'm Sam Ellis. I analyze Bitcoin market structure and on-chain data for serious allocators, people who want to understand why price moves, not just that it moved. In the next 9 minutes, I'm going to walk you through 5 institutional signals hiding inside the current ETF flow data and on-chain environment. I'll show you the specific thresholds that have historically preceded major moves, why exchange reserve drawdowns matter more than the raw ETF number, and what the derivatives market is quietly warning us about right now. Stay with me. This is going to be the most useful 9 minutes you spend on Bitcoin today. Section 1. Why ETF flows became the new on-chain signal. Before January 2024, if you wanted to track institutional Bitcoin demand, you went straight to on-chain data. You watched wallet cohort accumulation. You tracked exchange outflows. You looked at the behavior of addresses holding more than 1,000 Bitcoin. Then the spot ETFs launched, and the game changed permanently. Here's the thing most people miss. When an institution buys Bitcoin through a spot ETF, the underlying Bitcoin does move on-chain, but it moves into custodian cold storage wallets, primarily Coinbase custody, immediately. It doesn't show up in traditional on-chain cohort trackers the same way a sovereign wealth fund buying directly would. The signal gets buried. So now in mid-2026, the most reliable institutional demand signal isn't just on-chain wallet cohorts anymore. It's the combination of ETF flow data and on-chain exchange reserves. You need both. One without the other gives you half a picture. Right now, as of this week, total spot Bitcoin ETF AUM across the US products sits at roughly $130 billion. The 30-day net inflow figure, meaning what came in minus what went out, is running at approximately $4.2 billion. That's the headline number you'll see on financial Twitter. But that number alone tells you almost nothing actionable. What matters is the rate of change, the persistence of that flow, and critically, what the exchange reserve data is doing at the same time. Let me show you exactly what to look for. Section 2, the 3 inflow thresholds that actually matter. I've backtested ETF flow data against price action going back to launch, and 3 specific thresholds show up consistently before significant price moves. Not as perfect predictors, nothing is, but as high probability setup conditions. Threshold 1, 7 consecutive days of net positive inflows.